Okay, well, let's get you some perspective. Ed Yardeni, President at Yardeni Research, is joining us now. Ed, good morning. Good to have you with us here. Thank you very much for your time here. Prashant this side. So, two questions. One, there was this nascent recovery in small caps in the US. That, for the last 2 days, has gotten sold into. That is one. I mean, what's happening there? And second, implications for markets of this Biden announcement.
Well, I think with regards to the rally that we had in the small cap, some of that was short covering. Some of that was very specific to biotech and banks, regional banks that had been knocked down last year, had a big recovery in a couple of days. But then people had some second thoughts about it and had a closer look at the earnings story in this small cap area. And it's not that exciting. It's been kind of flat for the past 2 years. I think one of the structural problems in the small cap area is all the good companies get bought out before they go public. I don't know that we'll ever find a Microsoft again, in the sense that if there's a Microsoft out there that's just a newbie, just kind of growing, it'll get bought out before it ever goes public. So I think that's an issue. With regards to Biden, as you said, so far the preliminary evidence on the S&P futures is that it's a non-event. Look, the political situation is so crazy here in the U.S. that the stock market simply has decided, let's just tune it out until we get the next president and see what the next set of policies are all about. It's a very fluid situation.
Actually, that's true, because we haven't seen any kind of volatility in the U.S. markets despite all the back and forth, the yo-yoing of the presidential candidates, the health, etc., right? So that's actually a good thing, to be disassociated from the political news. But back home as well, we have a huge event upon us. There's a union budget tomorrow. The markets have, after a big rally in India, started to correct a tad bit. Now, we don't know if this is time consolidation or is it price-wise consolidation? But in your opinion, what's the best way to approach the market now in India?
Well, I think things are changing for the better in India on a regular basis. I kind of like the election results, that there's still some checks and balances in the political system, but I think the government of Modi remains very much in charge, and I think they're going to be able to get some of their reforms through and some of their areas in tax cuts, particularly on the capital gains side. So I think that all is positive for the market. The market's discounted a lot of good news, but it is a positive. For foreign investors, it's tougher because the rupee keeps going down. So you make money in the Indian stock market, but on the other hand, you translate it to other currencies, it's not working out that well.
Hi, Ed. Morning. Good to see you, Ben. Ed, from an Indian market perspective and emerging market perspective, the street believes that President Trump will be much better than any other candidate, because if President Trump comes in, the dollar index is likely to be a little bit softish. And given his relationships with India, India is likely to be a beneficiary. Would you agree?
Well, I think it's too soon to tell, quite honestly. Just to be brutally honest about it. There's a lot of uncertainty. Just because Trump says that he'd like to see a weaker dollar doesn't necessarily mean that's going to happen. And I think that, clearly the Trump policies are a mixed bag. On the negative side, there's a lot of talk about tariffs. And I think he's using it right now as sort of a bargaining approach to China. But if this thing with him accelerates into a trade war, that wouldn't be good for the U.S. It wouldn't be good for China. It wouldn't be good for world trade. So I think it's a little premature to conclude that Trump is definitely a positive for emerging markets, that Trump is definitely going to have an impact one way or the other on the dollar. The fact of the matter is the U.S. economy is very strong. It's doing remarkably well relative to other countries, and that typically favors the dollar.
Got it. Ed, we'll leave it there for now. Great conversation as always. Thank you very much that you were able to join us and shed light on many of the sort of dominating issues in the market. U.S. politics is dominating but not driving. Not for now, as Ed said. Mark is just saying, well, let's take a call once we're closer to it.